Well, hey there, it is Market Monday time. Thanks for joining me. February 16th, it's President's Day. Hope you have a great President's Day. For those of you that are home with the kids, enjoy it. It was also Valentine's Day weekend. Hope you all had a great Valentine's weekend. Before we get started, two things. First, let's take a second, let's subscribe, let's hit that notification bell so that every Monday you and I can get together and we can geek out on the Hilton real estate market. The second thing, I want to apologize, no Market Monday last week. I tried. I was out of town on some training, and there just was not an opportunity, both a place to do it and time for me to gather all the information. So this week we're gonna have 2 weeks worth of information, but there's still some really interesting stuff, and I'm really glad to have you here with me. So we always start with inventory. It's about supply versus demand. Inventory, listings are the supply side of our equation. So new listings, 349 properties have come on the market so far this year. That's 123 over the last 2 weeks. It's a pretty significant amount. But compared to a year ago, at this point a year ago, we had brought 359. So we're 2.8% less new inventory coming on the market this year as compared to the same time last year. And if we look back 5 years ago, 2021, 443 properties had come on the market at this point. So we're 19% less than where we were 5 years ago. This is the number this is the number of the week, folks. Current inventory, 829 properties for sale. That's up 6 properties from when we last met 2 weeks ago. But compare that to where we were a year ago, 988. We're 16% lower inventory. Not 1%, not 2%, not 5%, 16% lower inventory than where we were a year ago. Now, for those of you that follow along with me every week, you know that inventory is already low. Now it's 16% lower. That is the number that is driving everything right now. So for those of you that are interested in this market, that have money invested, these are the numbers that we're going to continue to pay attention to, and it's going to make us look like we have a crystal ball and that we can see the future. 988 properties a year ago, 829 right now. That, my friends, is significant. Let's go back, look 5 years ago at this point. We had 1,123, again, versus 829 right now. We're 26% lower than where we were 5 years ago. So that's the supply side. If you're a seller, nothing but good news on the supply side. On the buyer side, we've had 236 properties go under contract so far this year. That's 103 properties going under contract over the last 2 weeks since we last met. A year ago, we were sitting at 244 pending sales. So we're off a little bit. We have 3.4% less sales now, or pending sales now, than we did a year ago. But that purely gets wiped out, totally gets wiped out by the 16% reduced inventory. And if we look at 2021 pending sales at this point, we're up 51% higher than where we are now, 486, again, versus 236 pending sales year to date this year. The closed sales, we've had 193 so far this year, 72 over the last 2 weeks. Looking back a year ago, we were at 215, so we're 10% lower there. Those numbers, my friends, are gonna come up. I promise you those numbers are gonna come up. 2021, we had 349 closed sales at this point, so we're 45% lower than right now. You know, we take these numbers and we put them together and we come up with an absorption rate. 6 months neutral market, less than 6 months a seller's market, more than 6 months a buyer's market. We're at 5.1. We've dropped fairly significantly over the last couple weeks. We were at 5.8 2 weeks ago. A year ago, we were at 5.9. We're approaching a month's less inventory than where we were a year ago. Friends, significant. The trajectory, the direction that things are going, it's significant. If we look back 5 years ago, 2021, February 16th, 2021, we had 3.3 months. We know what that market looked like. for craziness and appreciation. And that was the market where I described distressed buyers. Buyers were distressed, they had to buy anything. They were making crazy offers above the asking price, no inspections. We don't want to get back to that kind of market, trust me. But seeing this number tick down week after week, and now we're sitting at 5.1, sales pick up at all will be in the 4s. And we're going to be off to the races. And those of you that follow along with me week to week, you know that I've been predicting this, that this is going to be the year that the market takes off. Does it take off in February? Does it take off in April? Does it take off in May when the new Fed chair takes the position? I don't know when, but I know it's going to happen. I know it's going to happen. Days on the market, this is an odd one, bumped up a little bit. But you know, we'll look at the number 5 years ago and we'll talk about that. We're up to 110 average days on the market it takes. When we met 2 weeks ago, it was at 94. A year ago, it was at 883. So significantly higher, right? But if we look back at 2021, I think everybody would agree that was a pretty strong market. 152 days was the average. And the average was up just because we were consuming so much inventory that had come on the market pre-pandemic. And kind of that's what's happening now. We've had like 2 or 3 pretty slow years in real estate. And now that things are starting to pick up, the houses that have been sitting and sitting and sitting, there's more of those kind of getting mixed in with the houses that sell in 30 days. And so it kind of pushes that number up. And that's all that is right there. It's nothing to be concerned about. It doesn't change my bullishness on the market in any way. We've seen this before. We've seen this number go up in very strong markets before. And it'll come back down. Once that inventory gets consumed and those sellers with these aspirational prices either give up on their crazy price or get realistic and lower their price down and go under contract, either way, those will flush themselves out of the market. So what do you ask? You're probably asking yourself, well, what the hell does this do with property values? Well, it's really good news if you own property here. When we met 2 weeks ago, it was $892,500 was the median sale price so far this year. It's down to $825, but it's just, there was just such a small pool of information that we're pulling from. As the year goes on, that number kind of stabilizes a little bit more, and we're probably getting into that area right now. $825,250 is the median sale price currently on Hilton Island. Where were we a year ago? $727,824, so we're 13% higher in 1 year. So for all those people that last year said, I'm going to wait for rates to go down, congratulations, you get to spend 13% more for a property and potentially save 2% on your interest rate. This is what I've been saying ad nauseum for a year and a half now. This market is a great market. If you can find what you want, negotiate, get a good deal on it. Now is the time to negotiate, or you can wait until it's a frenzied market and everybody else is buying and become part of that. We saw so many people do that a few years ago. 2021, 5 years ago, $476,420 was the median sales price. We're 73% higher than where we were 5 years ago. Pretty good stuff. Let's wrap it up. Inventory. This is it. Inventory down 16% year over year. 16%. Closed sales are down 10, but you can see with those two numbers, it's an improving market because inventory is down so much. Prices up 13, absorption 5.1 months is the current absorption rate. If you're a seller, what's going on with this inventory? Like, why is it so low? We started low and it's going lower. Because it's so low, even though that we're seeing less sales, the low inventory is what's pushing prices higher, higher, higher. They pour low interest rates on this little fire that we got going right now. We're going to have an inferno. The market is going to be in fuego. So it is the time. If you are a buyer, I implore you, right now is the time before things get truly, truly frenzied. And finally, let's wrap it up. Interest rates, 6.09 for the 30-year, down 1/100 of a point. But just know that a year ago, interest rates were 0.8 of a point higher, so almost 1% higher a year ago. On the 15-year, which is a great option for many people, a week ago or last time we met, it was 5.49. Now it's 5.44. and same thing 1 year ago is 6.04. So interest rates are moving in the right direction. You know, we've talked a lot about it. My call is interest rates are going to continue to go down this year, if for no other reason than the current administration wants it, and they're putting a guy in place that is going to serve that administration. And my guess is when he takes office in May, we're probably going to see a 0.5 point cut almost immediately, and then another 0.5 point. That's my guess for this year. We're probably going to be 1% less over the next year, potentially more, but I feel really comfortable with 1% less over the next year. So that 6.09 will probably be right around 5% on the 30-year, and then the 15-year, we're probably going to be looking around 4.5%. That's it. You heard it here first. Thank you so much for joining me. Happy President's Day, and we will see you next week.